Everybody speculates, whether it's buying stocks, trading crypto, or the historical gold rush. Everybody's drawn to risk, but why? Today's episode of Real Leverage, we're going to be diving into the psychology behind speculation and why sometimes it's the smartest move you can make. The literal definition of speculation is the forming of a theory or conjecture without literal evidence. What does that mean to you?
Excellent question. I mean, when you think of speculation compared to investing, especially with us being in the junior mining space, a lot of investors are called speculators. That kind of comes back to the definition is when you're speculating on a stock, whether it be junior mining, I guess crypto, anything, you don't have evidence to back it. So, I mean, for examples, a couple of companies I've bought recently here, I didn't do months of research learning about the company's management project, their balance sheets, cap table, all that. I just did a couple overview of it. It looked good, and I bought. That's speculation, in my opinion, because I didn't have a firm understanding of that specific company.
That makes sense.
Where, as an investor, which we are with some companies as well, we understand the ins and outs of that company.
Yeah.
What their plan is, what they're trying to accomplish, what their cap structure looks like, where their project is located, how many ounces they have for that junior mining example. And so to me, that's really the difference.
It's like the due diligence level. That's a good point. I definitely agree. I've done a lot of speculating and it's basically not gotten me anywhere. All my worst positions, I would firmly say were just speculation, and I bought off of, a little bit of like FOMO, a little bit of just hype. I don't know, whatever reason it was. And that was definitely speculation. Whereas investing, I would 100% agree. You do some level of due diligence. That being said, I think to tie the two together, you can invest in a speculative asset, but it is still investing, not speculation. It's an interesting thought. And I think the difference between that is, like you said, with investing, you can do due diligence all day long. You can do a month due diligence on a junior mining company, but at the end of the day, there's still a speculative asset. And maybe that's because the success of the stock rides on something that is not 100% deliverable by nature, because there's some risk involved, like gold or metals exploration. There's some degree of luck.
Well, I was going to say, and with those junior mining companies specifically, is especially the explorations who are highly speculative, is most of the company is based off thesis. It is based off of, if we hit this drill result, X amount of ounces are going to be here, and then we can go to development and production, which is extremely speculative. But you can be an investor of the company knowing that they might not have anything.
Exactly, but you've done as much due diligence. Yeah, that's an interesting way to kind of bridge the two. Definitely agree. You're an investor in them if you are an investor and you're not a speculator. But it is speculative still, which is kind of a difference. That's an interesting difference. Interesting to think how now we've come to this junior mining space and, mining in general. I should suppose let's not get selected to junior mining, but we're in the mining industry now and learning lots about commodities and all that. Here we are today talking about the psychology of speculation. One of the best examples in, not 1,000 years ago, but, a while back was like the gold rush. That's a prime example of speculating on something, and it's similar to speculating on a company going up today, but you're speculating on getting gold back in the day and how people probably had lots of FOMO and then they got involved. Maybe the initial gold rush in California, and then they came up this way to BC because they had FOMO in the States, and who knows what happened. I'm sure lots of them became rich, and I'm sure lots of them lost their whole lives. They lost all their money and everything in their careers, and they just...
Well, from school, it seems like it was a wild time. I remember learning about the gold rush in California, Vancouver, in the Yukon. But just that thesis that there may be gold there, right? Traveling for days.
On their horse or what?
Yeah, for an assumption that there might be gold there. But if there was, everyone heard about it, and then companies set up shop and little towns were built around it. So it is interesting, especially back then, because there was no technology to improve or validate that there was something there.
Yeah, good point.
It was, there's a stream. Let's hope there's gold there.
Yeah, exactly. I'm sure they had some plans or some reasoning why, people looked here or there, but at the end of the day, that is a classic example of speculation or driven by fear of missing out. 100%. Definitely.
Could even say early crypto, and I guess still with a lot of cryptocurrencies and coins now, they're very speculative. I mean, Dogecoin is a prime example.
Yeah.
Like,
Do you remember when that came out?
I don't remember when it came out.
I remember when it came out and it was like a cent and I didn't buy
A
it.
cent,
Oh yeah,
yeah.
100%. Dude, what did it peak at? It almost went to $1 or something, didn't it? Or 30
It went,
cents?
yeah, it went 30 cents or something
Yeah.
crazy.
Should have bought. I
Stay away
remember.
from that.
Yeah, I don't know when that was, but I remember hearing about it in like 2020 or 2021 or something. Maybe someone will fact check me in the comments. Leave a comment.
Exactly. Help us out. But
Yeah.
even Trump coin, it was such a speculative
Yeah.
coin. Like there was no value behind
Didn't
it.
buy that.
No, I shorted it at
Oh.
$35.
Oh, that's what it was.
Yeah. 'Cause there was no value, but it's
You talking about the stock or the coin?
the Trump coin. Like the crypto
It went
coin.
up to $35.
$35. Now I think it's down to 15 or something.
Holy shit.
15, 12. But yeah, again, pure speculation. And people were riding the FOMO because the cryptocurrency was going up like crazy. People were getting rich. Someone made $7 million when the coin dropped and just
Holy shit.
created the generic, greed emotion. Everyone wanted to get in and make $7 million now off Trump coin.
Yeah.
But there was no logical reasoning behind it or even investment approach other than I want to get rich.
Especially with something like that. I mean, there is something tangible about junior mining always because there's a physical thing that someone can find and sell. And there's a business model, even if it's different than something traditional. But when you look at something like Trump coin, like, is there actually one tangible benefit to having Trump coin? Like, do you get access to like Trump's group chat or like, is it literally just speculation?
I'm going to be honest with you. I didn't do any research on it.
Yeah.
I just saw it going up. I'm like, I'm short of this.
No,
I'm
fair
like, there
enough.
is no
But
reason this should be
I
going
mean,
up.
something that I don't understand about crypto enough because I haven't done enough due diligence on it in general. But obviously, the whole asset class is very speculative. I mean, even Bitcoin, I think, is inarguably speculative still. There's like a clear thesis for it and a monetary use for it, but it's so volatile still. Like, I would consider it still speculative.
Mhm.
But as far as the rest of cryptos go, like, there's millions of coins out there. Do any of them even do anything?
Not really.
Yeah.
Not really. I mean, it depends. Some use it as a different option than going on the stock market. So, I mean, Avalanche is a company who's on it. Instead of just becoming a public company in the stock market, they just make a coin. You buy the coin because you believe in their company. But again, that's also speculative in nature.
Mhm.
I mean, Avalanche is actually having some success right now.
Okay.
It's a very speculative industry in general. I mean, I could go on that for hours and the different coins I even invested in.
Like fart coin,
No, I wasn't a fart coin kind of guy.
Pepe coin,
I wasn't Pepe either. I missed Pepe. I was a Trader Joe coin kind of guy.
Trader Joe.
Yeah, so it's a coin for the exchange.
Oh,
But I mean, it didn't do anything because they didn't improve anything.
right.
But again, it's speculative. Like, what was Trader Joe doing differently than Binance or
Yeah.
BitGet or anything else?
Yeah. Do they all have their own coins?
Most of them,
The
yeah.
exchanges
Yeah,
do. Yeah.
Binance does. So
Coinbase.
Coinbase is actually in the stock market.
Yeah. I
So-
just didn't know if they would have like a
I
crypto
don't think
coin
they-
attached either.
No, I don't think they have a coin.
Yeah. I remember when they IPO'd actually. I wanted to buy Coinbase at IPO. This is so random and kind of off topic, but I remember when they IPO'd, I was driving to Town River at like 6 a.m. one day and I missed the IPO because I got time zones wrong and I was going to buy the second it opened and it shot up like 25% at open or something and I like missed the ride, but then it fell off for like months, if not years after. And I know it's doing really well again, I think.
Yeah, it's doing very well.
Yeah.
Yeah.
But I do remember the morning it IPO'd, I went to Camp River for like a dentist appointment or something. I was like, fuck, I need to buy it. But at 9:30 or 9 when it IPOs, but it did at like 8 or something. And I was like, oh, I missed it. It's already rode up.
So
I was pissed.
Did you have that fear of missing out? Is that what you had?
Great question. Yes, but I didn't invest anyways.
Okay.
I didn't fall into the FOMO trap
Right.
and invest because it had already gone on that ride up.
Mm-hmm.
But 100% in the past, I have done that all the time.
Yep.
I'm sure most new traders, new investors struggle with that. I'm sure everybody struggles with FOMO. It's got to be probably one of the most prominent cases of psychology and investing that everybody struggles with daily.
Oh, yeah. And I can even speak to that in depth. I mean, December 2024, January 2025, when Bitcoin was really starting to rip up past
Hmm.
111,000. I was like anxious. I was watching the coin, refreshing it every 10 minutes because I didn't buy more.
Right.
And I just told myself I was going to. And I'm like, okay, do I buy now? Do I buy now? Do I buy now? And it was just, I had so much anxiety. It was absolutely like sweating.
Yeah.
I missed it. I can't make any more money in it. What the hell? It was just
I
a
know.
classic example. And I'm not a Warren Buffett or anything, but I've been investing for 2 years and I still had almost anxiety attack over missing that
Yeah.
pump.
I've been trading for actively, like I've had a brokerage and have been placing investments for pretty much perfectly 6 years now. I'm sure this weekend, 6 years ago, I probably like invested in Boston Pizza for the first time. Honestly, I bet it was
Right.
6 years ago to this weekend, whatever that weekend was. I think it was like the 2nd or 3rd of September. Anyways, doesn't matter. But yeah, that's a good point with Bitcoin. I mean, naturally I have a little bit of fear missing out with Bitcoin. That's a good example because it is so speculative, but people don't know what it's going to do. You don't know if it's going to go down to, I don't think it'll go to zero. I really don't. I think they'll be used for it for a while, if not forever. But, is it going to go to $1 million? Everybody probably wonders that because you hear that online and then they get the fear of missing out, but then they see it's at 100 and whatever, what is it, 110, 115? I don't know, whatever it is.
Yeah,
Right
it dropped back down a while ago here. So
right? But then to give perspective, it's like, well, shit, is it going to go to $1 million? That's what everyone's saying on TV, but it's also at 115K. I wish I bought it at 20K. So there's like fear both ways of missing out on the top, but like fear of getting in too late.
yeah,
It's so interesting. I experience that all the time. Pretty much all of my bad investments have come from FOMO, and not even necessarily because I watched like a YouTube video or like scrolled Twitter for an hour and all everybody's talking about is like this stock. And I'm like, shit, I missed it. But even like self-induced FOMO for like a company that I've found, I've researched, I like the chart because I trade off the charts a lot and I didn't invest in. And I kind of like built the idea that, it's going to go to XYZ target in this time frame. And I don't invest for whatever reason.
yeah,
And then it goes up like a little bit towards that. And then I get huge FOMO because I've built up in my mind that it is going to get there. And then a lot of the time, I either will typically I don't invest because I didn't originally have my entry price. So I'm just like, whatever, I'll leave it.
mm-hmm.
But then I have the FOMO as it goes up. And, some cases, like I know I've told you about Palantir. I started investing in Palantir at $12.
Yeah,
I had Palantir at $12, $14, $10. Like it was chopping for a while. This was a couple of years back. It ripped all the way up to $70 early this year. And I was like pissed, having major FOMO, but I didn't want to buy it at $70 because I had been trading it at 12 to 14. It seems stupid. As we know now, Palantir peaked at like $190 like 2 weeks ago. I would have had a triple up
yeah,
from $60. And I don't know what it would have been if I bought it would have been what, 16, 18, an 18 bagger if I kept it at $12 in hindsight. So that would have been nice.
yeah,
But at the end of the day, it's interesting to think about the psychology behind it. Like my perspective of Palantir was like a $12 stock and I was not going to overpay for it at $70. But I was kind of like pissed because I missed out, and look at it. It would have been a three bagger. Like three baggers are great all day long. That's amazing.
right.
Especially when even if you're just like, even traders, if you're just a long-term investor, like you probably can't even dream of doing that in a short time frame.
Well, and to build on top of that, I mean, I've experienced this with KLDC right now, and then MicroStrategy in December of 2024. So I bought MicroStrategy at $222,
That's right.
and it ripped up to 340. Made some decent change on it, but then I had the fear of selling it and it going higher and me missing out on more profit. But I was already in the green, so why? It's just that stupid scenario of being greedy because I wanted more, right? And then I guess this is where some speculation comes into. Is I wrote down when MicroStrategy hit 322, I was getting out, but now it went higher than that, and I started getting speculative again.
And you were holding it past that.
I was holding it past that and not following my rules or my code.
Got to put those sell orders in. I used to do that a lot when I was trading a lot more actively, especially if I didn't have good sell circuits where I was working. I would just, have a reason, put a trade in, put a sell order to up 10% or whatever. That was kind of how I used to trade, buying like S&P 500 type stocks was just try to make 10% and get out. But for sure, that's a great example of fear of missing out on future gains that could keep going, even though you had a strategy.
I had a strategy, and I mean, I wrote the document. I didn't think it was going to hit this price for a year. So the fact that it did it in a
Yeah,
month,
it went crazy.
if
you look at the MicroStrategy chart, it was just like
yeah, so it was
insane.
I did end up selling, and then when you see the current price of it, I'm like, okay, happy for that. But even with KLDC, when we've seen it at 20 cents, 21, we want to take some money off the table, but it comes back to what if it goes higher?
Exactly.
And it's, again, we're more disciplined traders now.
Mm-hmm.
We are better at portfolio management. We have a longer time horizon.
Yeah.
We do our due diligence, but still we have that emotion of, okay, it could go higher. Maybe we should hold on a bit.
But we're scared to sell and lose out on those gains. That could happen, but we're also afraid that this is a top now.
Exactly. So it's both
ways. To repurpose our capital somewhere else.
And it goes both ways. But I mean, we've been a little bit smart in the way that we've took 12.5% off the portfolio and should continuously be doing that.
Yeah.
But it's still like, at what point do you take it all off?
Yeah.
Fortunately, with KLDC, I didn't write a price where I was going to fully exit. And I guess that's a little bit speculative in nature.
100%.
I believe in the company, believe in the project, but I don't have an exit price on KLDC.
No, how can you with, I don't know, junior mining is interesting in that way because how do you determine an exit price? Like you can, if you wanted this to just be like a drill program, speculative investment, great. Pretty much executed perfectly, close out the investment and look for another one. But we didn't have that determination going into it. And it's hard to say where it's going to go. If Joe thought it's absolute smash, could see it going up another 50% from where it's at right now, easily, probably, given how hot it's been off the news.
Yeah.
But you also, how do you determine, like, you could think in 5 years, they're like, developing this asset and it's at $2 or $3, the stock. But in, 5 years, it could be at zero. And this project is like, up for sale for 2 years.
Well, and that's just it too. And it's unfortunate. I mean, it kind of, now that I think about it, ties it back to MicroStrategy as well as I did not think it was going to go this high, this fast. And I'm not prepared for it.
No.
And now it's kind of every day. It's what do you do? I mean, we believe in the company and management, and we have set, 5-year time horizon minimum, but we also haven't been in this space long enough to know, okay, we've made a 4-bagger. Do we get out?
And that's the thing that, who depends who you ask, right?
Yeah.
You look at most people, they say, everybody wants to get to that infamous 10-bagger. Lots of people say sell a quarter at a 3-bagger and then 50% in a 4-bagger and then let it ride or wow. You know what I mean? Everyone has their own rules. At the end of the day, we're riding for free at this point, which is cool. But it's hard to say. I mean, something I've kind of talked about as well, which is kind of like a mindset thing, not super relevant to this conversation today, but everybody thinks that their way is the right way. And in that regard, it's like you could ask 10 people how we should handle this trade and we'd get 10 different answers. Just like I've gotten 60 different answers on how I should navigate my young career in the capital markets. I've had 60 conversations. And pretty much all of them have been different as to, you should do what I do because I'm rich and I'm successful at it. And it's the best way to succeed in the capital markets.
And I'm the best at this specific.
And it's like, that's 60 conversations. And I'm not trying to talk shit to anybody, but it's been insightful to see how everybody thinks that their way is the best way. And in their career or like their career, like you want to be a broker or an EMD, or you want to be just a trader, or you want to be a CEO of a company or a CFO, or you want to be in private equity. Like these are kind of the broad examples. So it's interesting to think, how do you learn or navigate, FOMO and like managing trades and stuff when everybody's biased?
I think we are doing it the right way by, we're reading the books. We're listening to everyone. We're open to hearing everyone's opinion and idea on the matter, but ultimately we're going to make the mistakes and figure it out. Unfortunately, that's kind of just how
100%.
it goes. Like we've
That's
heard
what I
so
was going
many
to say.
times.
I was going to let you finish, but that's exactly what I was going to say. It's going to be to some degree trial and error. Try to get a good understanding, use our best judgment, which is usually pretty good for us.
Mm-hmm.
But at the end of the day, we're new to junior mining, investing.
Well,
It's going to be a little bit of trial and error, but we've got a good foundation of considering the psychology behind our investments, given our history of investing.
for sure. I mean, for me, it's only been 2 years, but even my portfolio management 2 years ago from now, terrible.
Yeah,
Absolutely terrible. Just I was one greedy bastard. I wanted everything, no plan, just and I'd go all in. If I had $1,000, I was all in on, let's say, Bitcoin or Ethereum or whatever.
fair enough.
Specific. Just trying to get rich, no strategy or plan,
Yeah.
and that's how you get eaten alive.
Exactly.
The market will teach you a lesson.
Our experiences kind of differ a little bit that way. You invested in, Bitcoin, like you said, and you were full porting that. I wasn't full porting anything, but I was probably trading like 25% of my portfolio into like a NASDAQ stock at a time and only holding like one or two of them. And like that is horrible portfolio management. You can ask a number of different people. Like some people say 10 stocks. I would say 20 is probably like a good average, maybe 20 stocks. I mean, Ryan Irving says that's optimal based on like some portfolio theory. I guess that's the best way to get a balanced portfolio, managing not too much risk, but not too little. But then you look at other people like Don DeRay in junior mining, and he holds like a couple hundred stocks.
Yeah,
Everybody's different.
everybody's different. Personally, I like the 20 method. I don't have 20 stocks in my portfolio.
No, I'm not there yet.
But you can have, for a mining specific example, 5 gold, 5 silver, 5 copper, 5 uranium. If 1 and 5 does decent, your portfolio is looking pretty well.
For sure. I mean, you can divide that up further too. I mean, hell, you can even just go for a proxy play on, silver and gold, uranium, copper, just buying the metal. And then that leaves you 4 companies outside of that. One of them could be junior exploration, one could be a production, one could be a major, and one could be a royalty company. And
Exactly.
you have like mass diversification, even though you're still in this one industry. So there's some risk, sure. Gold kind of
But
helps
your
mitigate
portfolio
that
is going to
risk.
do well regardless
Yeah.
in one, especially adding royalties. I mean,
Yeah.
add royalties.
100%. Yeah, definitely. Something that's interesting that I've been thinking about is recency bias with psychology.
Mm-hmm.
It's something that I've definitely struggled with. I mean, and it kind of ties into FOMO a little bit. I think it's kind of like a pillar of FOMO, you could say. But something that people definitely struggle with is like the recency bias. They think whatever's happening now is going to happen forever.
100%. I mean, even our new employer, I was talking to him about how I wish we got into junior mining or mining 2 years earlier
Yeah,
to
that's
see
right.
it. And he was saying, just because stuff's going up now doesn't mean it's always going to go in the bull run. He said it's gonna go up, go down, be stagnant, consolidate, and again. He's like, yeah, recency bias. Exactly. It's like people think just because gold and silver had an amazing week, it's gonna do that for the next 4 years.
Speaking of, we're going to come right back to that. I was looking because I just ended up clicking on my computer our episode 2 episodes ago now, episode 6, where we dove into macroeconomics, geopolitics, and investing. And we put our price predictions, and you said gold 3,600 by the end of the year, and I said silver for $40 next week. And that was a week ago. And gold and silver both smashed both those targets literally the day or 2 days after the episode came out.
Call us macroeconomists, I guess, at this point.
Yeah. Anyways, getting back to what you said, absolutely. I mean, even in a small example like that, like kind of recency bias made you think, I wish I was there then, but it was different then. And even a different example, you look at like meme stocks, like the recency bias that and the FOMO that drive, meme stocks to the moon, like GameStop. Everybody was just piling in on it because, one, they feared they missed out on whatever happened, the day prior. So let's get on the next day. And then, after 2 weeks and it's just going insane. And I didn't even partake in that. I just remember reading about it. I'm sure lots of people have. But the recency bias of it's been a couple weeks of this, it's going to be another week. And it was not.
No. That is a crazy. Yeah, I want to research the shit out of that. I mean, I've seen the movies and documentaries.
Isn't there a full movie?
There's a movie and documentary
on GameStop specifically?
On GameStop, on the rise of that. Yeah, because
I should watch that. I haven't. I've just like with Theos and Twitter and
Seth Rogen plays a billionaire in that. That
Really?
loses, yeah.
holy shit.
It's a little bit off topic, but it's a great movie. It's hilarious,
Yeah.
but it is interesting too. And yeah, recency bias played a huge part into that.
Mm.
And greed. Greed was massive. I mean, I don't think anyone thought GameStop was going to get to its peak. I don't even remember what its peak was. It wasn't 300. No.
I was going to say 400, but I didn't want to sound crazy.
No,
I don't know. Maybe it was a couple hundred.
It was way more than it should have been.
Yeah.
And that's kind of another thing of speculative stock is there was no reason that price should have been so high.
Just Wall Street Bets on Reddit. Check it out. It's a wild place.
You'll lose some money listening to those guys.
Yeah.
In
It's
some of their tweets where they're like, I'm down 100,000 a day of my inheritance.
billions.
Yeah.
Or whatever. Who was it? I read on there. This was like a few months back, but the dude who put like, his grandmother died and he got like
800K or
800K
something.
and he put it all on, God, what is it? What was the stock that he bought? 800K on
Oh man, it wasn't it.
Intel.
Yeah, Intel.
Put it all on Intel. And you know what?
You know what? It's probably good now though.
It was bad though. After he made the investment, it was bad. He was down like half for like a few months, but now he's up.
If he held. If
you're listening to this guy who did that, get on the podcast.
We would love to have a conversation into your thought process
Yeah.
behind that.
We could do like a part 2 of this with that guy.
Right? But no, that was even crazy. I mean, and again, I don't even know if you'd call that speculating. That's just gambling. That's just throwing on the roulette wheel and hoping you hit black.
And that's fun.
That's you have some fun.
We've done that.
We've done that, but it doesn't pay well, and
No.
you get burnt
100%.
really fast.
And then you make bad decisions moving forward as well because you're resentful for what happened.
And trying to make back the money you've lost.
Exactly.
It's the psychology of investing and making a good trade, losing a trade, losing money in general, or making money is so fascinating because I was one to say, oh, that's never going to happen to me until you're actually in it, until you read a news headline where your company you've invested in is directly affected and you're like, oh shit, I'm going to lose thousands.
Yeah, 100%.
Happens to everyone. If you say it doesn't happen to you, bullshit.
Yeah, exactly. Even in small ways, I feel like we're quite aware of it now. Doesn't matter. At the end of the day, every time you look at your portfolio, there will be some sort of psychological bias driving your decision, unless before you enter that trade, you have clearly defined exit prices or, rebuy prices. Yeah. And on top of that, they would probably have to be predetermined in your trade in a bracket order that you don't even need to look at the trade. It either sells for you or buys more and sells at a later date or has a stop loss. That'd probably be the only way you don't experience those psychological biases
and lots
in
of
a trade.
And lots of people do that. I'm pretty sure Braden Sutton, we've had many conversations with. I don't know if it's to that extent, but he basically takes the emotion out of trading.
He does.
Essentially, which is very impressive.
It is.
Me personally, I always like to have a finger on the pulse. But if I know I'm down, I just don't look at it.
Yeah.
And I don't know, I might get some hate or judgment on that strategy, but if I have a long time horizon on it, I just don't even want to look at it because I still have conviction. But then again, most of the stocks I'm currently down on are just speculation from the past.
Exactly. That's how kind of this conversation has come full circle and how, what we've talked about comes full circle. At the end of the day, those bad investments you're going to make are probably going to be driven from the psychological biases, and the good ones that you make most of the time with a good strategy will perform well because you're thinking clearly before you enter the trade, and by the time you exit the trade, everything is planned out and executed well. Well, thanks a lot for listening, guys, to this episode of Real Leverage. Stay tuned for the next episode. Look up VRIC, check it out. Stay tuned.